right? So it was, it's too big, it's too much money, the mistakes are larger. And it's true, it is larger. The mistakes can be a little more painful, but it all comes down to a mindset.
Hey investors, Bradley here from Watson Estates, and you're listening to the largest, fastest growing podcast for Toronto real estate on iTunes, Spotify, and Google Podcasts. Now, we like to do regular market updates, keep in the loop with what's going on here in Toronto and GTA. But you know what? Why invest in residential if you can just kind of throw it out the window and go all the way to commercial multifamily apartment? I know you're probably like, I can't do that, Bradley. I just can't do it. You can. You really can. And our guest today, Mark Baltazar, I'm really excited to share with you our conversation, talking about what that could look like, how to grow. This is a fantastic opportunity to enter the multifamily space. And so we have a great chat. He's the winner of the Real Estate Investment Network's Top Player of the Year award in 2017. He also has $20 million assets under management and is co-host of the Canadian Multifamily Investing Podcast, which I am also an avid listener. I know you guys are going to get a ton. We talk about the market, the commercial multifamily market, and how to choose a property. What does that look like? I want you guys to feel confident because I know that this process has worked for me. I know a lot of you are feeling like you're maybe in that position where you're ready to jump from residential into commercial, or maybe some of you are just like, let's just go straight for the commercial jugular. Now, if you guys could, please hit the like, subscribe button and leave us a comment, especially if you have a question, any questions for Mark down below. And I hope you guys enjoy the show. Hi, Mark. How you doing? Thanks for joining us on the show.
Great. Yeah. Thanks for having me. Excited to be on and chat.
Fantastic. Now, for anyone who's just tuning in, Mark is a familiar face in the commercial multifamily apartment space. And so that's going to be what we've covered today. I want to get a little bit more into some of the markets. But before we go anywhere, can you maybe tell us a little bit about your background? How did you get into this arena?
Sure. Yeah. So, I've been investing in real estate for 6 years, just a little over 6 years. My previous background, so I spent a lot of time in the corporate space first, strategic planning, research, insights, and then was a part of a marketing research company based out of Toronto. Did some cool analytics for some very well-known brands in Canada and around the world. So that kind of really honed my strategic, analysis and analytics skills. But I always had, real estate in mind. At some point I wanted to invest first. So I started investing 6 or so years ago and then realized that, I think this could be a good, lifelong, career. One, because it's, you're doing it for yourself, but also it allowed me to, coming from the consulting space, traveling around the world and, spending a lot of time away from home, I found that, or at least thought that real estate was going to be my way to kind of spend more time with family. And it has been. Still working hard, but able to do it a little more locally.
So 6 years down the road now, you've been doing this for a little while. So what does your portfolio look like now? And maybe tell us a little bit about Peak Multifamily, the company you run.
Yeah, sure. So I've done probably about 30 flips, like single family house flips. I had a portfolio of duplexes, triplexes, a fourplex. I've sold almost all of those now. I have a duplex left that's conditionally sold, so that will be gone soon too, and shifted kind of my resources into apartment buildings. So we have 5 apartment buildings right now in the Ontario market. Still do flips. I enjoy it. Not as the volume is not as great as it was before. A couple, just it's interesting. I like the idea of converting things from old into new, and it keeps some cash flow going, and again have the system and the network to continue doing that type of work. But I'd say 4 or so years ago, kind of started to dig into commercial real estate a little bit more. The light bulb essentially went off for me in that, again, I was a business owner, grew a firm from 3 to 30 people, like the business side of things, and found that the commercial real estate, space was more like running a business, and that mainly is that the assets valued on income. Or businesses, whereas single family, not so much, right? And so I found that moving into that space was kind of operating your own little independent businesses. And so I really enjoyed that and felt like I had more control over the valuation of these assets. And then, after the first 2 buildings, kind of partnered with my current partner now, we built, started building a brand around what we're doing and, helping people, get into the space as well through education and working with partners to grow their portfolio as well.
Yeah. So was the way you analyzed the deal the primary reason for jumping into multifamily? Or are there other reasons that you kind of burned the ships on the residential side and went both feet in on commercial?
Yeah, so I think a couple things. So control over the valuation is one. The scale, so also scalability, right? So I think there's economies of scale when you're dealing with an asset that has 20 units versus 2. Allows you to do some more things. I think vacancies or tenant turnover and such become less of an issue. I think when dealing with commercial, you can also scale up your portfolio a little bit quicker, at least from a unit standpoint. And you could still do similar strategies. So, for example, many people are familiar with the BRRRR strategy. Well, you can do that in apartment buildings too. It just takes a little bit longer. You're pulling out more money. And so the similar, methodologies, concepts can be applied in commercial. I just find that the bang for your buck is a little bit bigger.
Right. So I think this actually is maybe a good point, because so you've done the graduation model, right? You start with residential, you graduate into commercial, but your program, and as well as other ones, I know many other coaches doing it too, but you have a fantastic program of teaching people that you don't necessarily need to start in the residential space. So we're going to get a little bit more into how you identify the markets and the properties and all of that fun stuff. But I want to start here because I think a lot of people are I don't want them to tune you out and think, you know what, he's in commercial, he's too big for me, because it's simply not true. Maybe explain whether it's through your course or through a lot of the one-on-one coaching you do with people, how convince me that if I have no experience in real estate, that I can get into commercial multifamily apartments.
Sure. It's a great challenge. So, in fact, it started, so about a year ago, we started a podcast as well about multifamily investing in Canada. And the impetus, the objective of that podcast was just to bring a little more awareness to the asset class, and also just to show that everyday people like you and I can get into it and have started somewhere. And so a lot of the topics that we talk about, we're talking to seasoned investors as well as new investors and how they started. And what we found was that whether they were in real estate before or they're just starting fresh, because people do start into multifamily without starting in any other real estate, it was a mindset. It was a mindset block. Right. So it was, it's too big, it's too much money, the mistakes are larger. And it's true, it is larger. The mistakes can be a little more painful, but it all comes down to a mindset. And so what we teach in our program, so it's a 10-step blueprint to buying multifamily. It starts with, and this step one isn't just for real estate or multifamily, it's for everything you do. And it's really understanding your why and your objectives. So designing your life, what do you want to achieve in 5, 10, 15, 20 years? And then real estate's just a tool. Like no one really, I think no one really wants to, no one really cares about the bricks and mortar, to be honest, right? It's just a means and it's a tool to get to, a life goal or life dream. And so anchored with that drive, then we show people how to partner, how to find the right teammates, how to build, a network, a power team to, execute or buy, whether that's finding money partners, whether that's finding people who can operate, whether that's finding, the proper lawyers, accountants, or realtors to help. I think anyone with a drive can build, a network and a team around you. Everyone has certain skills. It's just identifying what those are, identifying what your gaps are, and then, filling them with proper team members. And so, for those that want to try to go into multifamily and don't have other real estate experience, well, you obviously have, some drive and you have, intellectual capacity to think about, this space. Partner with someone who's done that already, right? So, there's so many ways to get there. And that's actually what I love about real estate too, is that it's so creative. I used to think before getting into the space, it's just buying and selling properties, whether it's land or buildings or houses, and it's very boring, right? It's just transactional. But as you get further into it, it's a very creative space. There's so many ways to slice and dice a deal. Like you and I could be looking at the exact same deal, but come up with different numbers because our approach is different, right? So it's, it's very creative, very exciting. And so I think, anyone can absolutely get into it if they're driven enough.
And that is true. I know that's true because I've got a good friend of mine. I'll give him a shout. His name's Herbert. And he recently jumped into the multifamily space. And
Mhm.
I was on a call with him yesterday and he was laughing and he's like, never in my life would I have thought I'd be submitting an offer on a $3 million apartment. And he is. And so it is absolutely possible. And you just need to create it as a business in a lot of the ways that you've described.
Yeah.
So for people who are in Ontario, the market is naturally working against them. Can you dive into the difference? Because I know, at least from my perspective, I've seen out of province, I've seen a lot of the differences. I know we were talking on before the show about some of the things that even deals that we both kind of run into. What does the Ontario commercial multifamily apartment space look like right now?
So it's very competitive. So, talking to other investors that have been in the space for 20 years or more, even, they're seeing that there's just more demand, more people coming into the space. And so, for operators such as us, operators being those that are acquiring these assets, it is becoming tougher, similar to what you're seeing in the single family space in Ontario, multiple offers, bidding wars. That too is happening in commercial multifamily. It's kind of, crazy to think about, but that's what's happening. And so there's this heightened demand for this asset class. And I think the heightened demand is being driven by a few different things. Real estate in general, being driven by lower interest rates, right? So the cost of getting into these assets, at least from a financing standpoint, has dropped significantly. Interest rates are, we purchased a building 6 months ago at an interest rate of 2%, right? A refinance of less than 2%. So the cost to borrow is so low, and so these higher mortgages make it appealing. The other thing that I think is happening, again, not an economist, but just by observation, is that other asset classes in real estate, such commercial real estate, such as retail, industrials doing well, but office space. So office space and retail are both taking a fairly significant hit right now. And so investors are moving their capital into much stabler classes of real estate. Multifamily has always been known as that recession-proof asset class. People need a home. Here in Ontario, at least, we have a housing shortage. So demand is high, supply is low. Economics 101 creates, this upward pressure in rents. Investors like that because that money in their pocket. So I think there's a few different things that are happening. And I think also you mentioned at the beginning, there's this graduation that's happening. There's a lot of people that have, been in single family and have been doing, that strategy for a little while. And have also, I think, realized that, instead of buying 15 single families in a year or 10 or whatever kind of level you're at, let me just buy one building every year or every 2 years, and I'm probably going to hit the same numbers, right, with a little less work. So I think there's a confluence of a whole bunch of different factors, but I think the economy is a big part of it.
And I think it's interesting because on our show, we talk a lot about residential, and we see that in markets where there's tightness, the supply and demand imbalance, there's a natural expectation the next year or two prices are going to go up in those markets. And from what I'm seeing in the commercial space, it is hot. And so if that's any indication of the next year or two, it's not a reason to be concerned or not go into it. It's a reason why so many people are going into it. It's actually a draw for a lot of people. It also is a call out to the government to say, hey, we need more of this, right? Like there's people willing to pick these up. We just got to get them built. And a lot of builders are stepping into that role. And
yeah, absolutely. Yeah. The supply side, and so supply being the number of rental units in a market, hasn't really grown much since the 70s, right? So we had a big influx of, purpose-built rental units, and then it kind of didn't really go anywhere for a long time. 2016, 17, there was the intent of larger developers to build purpose-built rental units, but then when in Ontario, the allowable rent increases dropped to 1.8%, that had impacts on the economic models of some of the larger players, and so they pulled out of some of their deals, and so supply hasn't really changed much. So I think there is an opportunity for those. We buy existing, turn them over, re-rent them, make them nicer than what they were. but there's a big opportunity, I think, from a development standpoint.
I agree. I agree. So there's, I guess, three types of listings that you have for people that are looking for deals. You've got the off-market stuff, which is like Cowboys and Rangers. You've got the exclusive stuff, which is based on the network within the province that you're operating in, and it's a pretty niche community. And then you've got on-market. How do you approach those three different arenas with your deals?
Sure. So we actually just presented something just to, people that are entering, just to give them the scope of where deals are coming from. So off market being essentially off market, you're going directly to the seller. Now, to do that, you typically have to engage in some sort of seller marketing, right? So, or you have to contact them in some way. Now, compared to single family owners of buildings may be a little more savvy from a business standpoint. I mean, they've been running a business, and so you can get to them. But the deal flow is let's say low. It exists. If you can get a hold of one, great. MLS, in contrast to single family, the deal flow, again, I can speak in Ontario only, it's also fairly low. And the main reason is, or a couple of reasons for that, is that building owners don't like to put their properties on the MLS for a couple of reasons. One, they don't want people showing up their buildings, right? Without notice. Sometimes they don't want their tenants to know that they're selling the building, right? It's kind of a private thing. And so that comes, so now exclusive broker, so that essentially is where you've hired so it's still a realtor that's, engaging in the deal, or, acting as the representative in the deal, but they're using their database to sell it. So they're not putting on the open market. It's still considered on market or listed. It's just being marketed exclusively to those that are, more likely going to buy. And so, that source of deals, as a purchaser, as someone who acquires, you need to have good relationships with those brokers, because they're only going to send it to those that they think are going to close the deals. And they don't want, especially in a hot market right now, where there's a lot of people trying to get access to deals, they're only going to deal with a few people, and they don't want deals to get tied up for unnecessary amounts of time.
Right, which can happen too. That's right. So when you're choosing a market, then, because I know you guys are in Ontario, what are some of the key things that you focus on and saying this is a good one, this is not a good one? Are there different metrics you're using, or how are you selecting those areas?
Yeah, so we have a scorecard that we use that ranks markets. I mean, we've been in Hamilton and Barrie is where we are now, St. Catharines, but because of because demand is so high, we are looking in other markets as well. And so we look at, first and foremost, the economic fundamentals. So is GDP growing in that market? If GDP is growing, jobs are typically growing. There's economic, activity. Economic activity is good because it provides jobs, it provides income, and income can support rents. So just, again, just looking at the fundamentals of rental demand. Population growth. So is it growing? I mean, now we're in a state where nothing's really growing, but was it growing prior to the pandemic? And is it a place? Is it a region where people tend to migrate towards? Because again, population equals customers equals higher demands for rent. Market, so now getting into local areas, if it's near transit, some sort of transit system, that's that gets kind of an extra check mark for us, because again, it's more demand, and people are willing to pay higher rents in areas that have transit. So those are the main things. Also, population size has to be, typically, we're not looking at any market right now, I don't think, of populations under 100,000, 120,000. We're not into smaller markets. At least at the moment, that's been our strategy, is to stay into larger cities, essentially.
Is there a reason for that you focus on larger cities instead of small stuff?
Mainly it's demand, so rental demand. Can we scale in that market? Meaning, are there other buildings that we can buy? So if we go into a market, we don't want to buy one building, we want to buy multiple buildings, just from a scale standpoint. Also, in again, in times of, economic uncertainty, the more boxes we can check from an economic fundamental, so GDP, population growth, transit system, it provides kind of almost like an insular layer of protection for your assets. So the more things we can do, the better. Not to say that smaller markets aren't good investment strategies. Typically you can buy, they're producing at a higher cap rate. The markets we're in, we're buying at a lower cap rate and, improving them. So that's what we're focused on right now.
And okay, great. So when we're looking at properties, when you're seeing the building, so you like the market, now you're looking at the building, what are some of the things that you first in that kind of checklist look at to just identify if it's a potential one or not?
Sure. Purpose built. So, is it a building that was built originally purposely for rentals? Because sometimes, you do see, 10 unit or 12 units that may be a large kind of house or mansion that was chopped up into different rooms. We typically stay away from those. So purpose built, concrete, stick framing sometimes, but, brick exterior, again, durable. Typically the stuff we're buying, they're 40 to 50 years old or so. It looks worn, right? It looks dated. It looks like it hasn't been, been very little upkeep. And by the very nature, typically rents are low. So from a financial standpoint, the rents are low. So the rents are, 40 to 60% lower than what they should be for that area. And for us, that's ideal because then it allows us to apply our systematic approach to improvement. Now, those are, becoming harder to come by because, as you mentioned, demand. It's a good way to generate ROI fairly quickly, and because of that, there was a lot of eyes on those types of properties.
Yeah, and I know based on speaking with you too, you're doing a lot of joint venture partnerships strategically. So I'm curious because we've had guests on the show that are more focused on, I can maybe borrow the funds or I can just kind of do it myself. And maybe they're playing more in the residential space, but why joint venture? Why has that been a business model that you guys have stuck to since beginning in commercial apartments?
Yeah, I mean, so we have two buildings on our own, myself and my partner, that without kind of capital partners. I think it becomes a scale issue. It becomes a scale, so the more we have, the more efficiently we can run operations. We have a marketing person already in-house. We're looking to bring property management in-house. So number of units allows us to optimize the business from a scale standpoint. And so in order to do that at the speed that we want to do that and buy at the speed we want to buy at, then we partner with people to do so.
Gotcha. All right. So I want to definitely be able to speak about your masterclass you got online, available to people. And I thought, maybe you could tell us a little bit about the program, but also share with us one or two golden nuggets from that and what people could expect for the program, things that they need to know if they were interested in multifamily.
Sure. Yeah, no, I appreciate it. So we just this past weekend, we just did a 15 plus, I think it was more, 16 hours of training over 2 days. And so it's a 10-step process. And essentially we're not talking conceptual. We're basically just teaching people what we've gone through and what we go through today. So we're active operators in the space and we're just showing, we can only talk about our own experiences. And so a couple of key nuggets. I think we have a feedback survey at the end just to kind of, get a gauge of what worked and what didn't from a content standpoint. And surprisingly interesting that, you hear, talks about goal setting and really understanding your why and all that kind of stuff. And, at first, so that's part of our process. That's kind of step one. Out of the 10 steps, that's step one. And when Mike and I developed the kind of 10-step process, we talked about doing that. And we thought, there's a lot of people that kind of talk about that. Do we really need to do that? And we decided to do so. And the way we structure that conversation and those kind of tools that we provide to really clarify your why is we tie it back to a building or the purchase of a building. So if you purchase a building, first of all, you need to understand your why and why you're doing what you're doing, what your end goals are. And then it's about, okay, well, what is an apartment building going to help you do, right? And if the apartment building doesn't help you do that, or the market doesn't help you do that, then you don't go into it. right? And so it becomes a very critical filter. Helps you filter who your team members are, which market you go into, what cap rate you buy at, what size you buy it. So it becomes a foundation of everything. And so the eye-opening thing for us was that there were, most people, everyone was actually receptive to that idea. Is that, yeah, you know what, I need to anchor my end goal into an apartment building, if that's the strategy you're going to take, right? So it should dictate exactly what you're buying and where. So that was kind of insight number one, is that there's still a lot of kind of validity in having that why and goal setting conversation. Just when you thought it was beat to death, it seems like it hasn't been.
And that's so true. In all honesty, as when you bring on a coach, that's a really good place to start, because you might think, I know from my experience too, like I've heard from many coaches, but once you're starting to work with a coach, by going through that process, they actually tackle it from different angles. So I think you would be leaving a lot out by not covering what that why is, because first of all, we should be constantly analyzing it, but also from your perspective, right? Specific to commercial apartments. It takes on its own form in any venture that we take on. So I think that's great.
Yeah. And we do that. So we also, when we engage with capital partners, we ask the same question. Why are you investing in this? Because sometimes there isn't a fit, right? For those that are looking for instant cash flow, from day one, and would rather have cash flow today and trade off larger ROI in the future, then our projects right now aren't the right fit, and we need to know that up front, right? And some people are okay with trading off, larger ROIs in the future and not kind of take the income today because they have, a job today, or they're doing other strategies. So no matter who we engage with, that conversation has to happen, because, again, it's, if you're buying on your own, you're going into a project for 5+ years. If we're partnering with someone, that's a 5+ year, engagement as well. So that's, that conversation happens with whoever, anyone we're connecting with and partnering with. So yeah, no, it's been a helpful conversation opener, and you're right. From there, then we determine what the strategy is going to be.
Now, for anyone who's kind of just dabbling in this for the first time, I would encourage you guys to find Mark online. Mark is a heavy lifter in the multifamily space here in Ontario. Mark, can you share with us a few of the platforms where you share content? Because I know you've got incredible sources of info that I've been able to connect to personally. Can you share where people can find you?
Yeah. So on our website, peakmultifamily.ca, I mean, we are doing regular webinars, and again, we're just sharing what we're doing and, what the struggles we come across and the learnings on the deals that we're doing, and, operations and financing and all that. So peakmultifamily.ca, there's webinars and content there that you can check out. And if you're interested in our next round of, teachings and masterclass, then that will be up there as well.
Beautiful. And your podcast, can't forget that.
Thank you. Yeah. So we do publish a podcast, and again, it's dedicated to specifically multifamily. And so if you're wanting to learn about the process, what happens, how deals happen, how they get financed, kind of the nuts and bolts of it, then check it out, the Canadian Multifamily Investing Podcast, and that's on all the platforms. And then social. I mean, I'm pretty active on social, LinkedIn, Instagram, Facebook.
Awesome. Yeah, guys, please support Mark's channels wherever you kind of get your content. And if you could, even on this video, please hit the like, subscribe, download the last 5 episodes, whatever it takes. Even share it on Instagram if you learned some stuff, and motivate your friends. There's a lot of people running into the apartment space, and we want, there's plenty to go around, but we also, I'll say this right out of the gate. Even though I'm here, I have no problem sharing the information. There is lots. I don't know the exact number, but there is a lot of units across Canada, so there's plenty to go around.
Absolutely.
There's room for all of us.
Yeah, there is.
Awesome. Thanks, Mark, for taking time, and we'll see you next time.
Cool. Thank you. Appreciate having me on.